Hello everyone, I am Ryotaro Nakayama, President and Representative Director of Makuake Incorporated. Thank you very much for taking the time out of your busy schedules to watch our full year earnings presentation video. Today, after reporting on our results for the fourth quarter and the full year, I will explain our outlook for fiscal year 2026. Now let me begin by discussing the financial results for the fourth quarter. First, to summarize overall, regarding our business performance, we have exceeded the upwardly revised forecast disclosed on August 26th. For the Q4 alone, net sales were 1.22 billion yen, which is 8.7% higher than the forecast, and operating profit reached 27 million yen, which is 174.4% above the forecast. In the third quarter, a large-scale project contributed more than expected, but if we exclude the impact of that, both net sales and gross profit have continued to show a steady upward trend. Additionally, especially in the Q4, we made investments related to human capital management, which temporarily increased personnel expenses, including training, bonuses, and recruitment. However, overall SG&A expenses, including personnel costs, remained within the planned range. In addition, we also recorded an extraordinary loss of 55 million yen due to software impairment and valuation losses on investment securities. Regarding the main KPIs, the number of active projects on the Makuake service continued to show an increasing trend following the third quarter. The strengthening of proactive sales activities by the sales team to acquire new high-quality projects, as well as the expanding impact of encore projects, are contributing to these results. Although the monthly project unit value decreased compared to the third quarter, this was in line with our plan. Excluding the temporary increase in unit price caused by large-scale projects in the Q3, the unit value has continued to rise steadily since the Q4 of the fiscal year ending September 2024. Regarding our progress toward the medium-term plan, for the fiscal year ending September 2025, net sales reached 4.57 billion yen, a 25.3% increase year-on-year, and operating profit was 440 million yen. These figures exceeded our initial forecast by over 20% for sales and over 270% for operating profit, resulting in outcomes that were higher than we had anticipated. For the fiscal year ending September 2026, while keeping in mind the early achievement of our medium-term management plan, we will leverage the improved operating cash flow as a foundation to further strengthen our growth capabilities. This will involve expanding investments in Makuake Inside, the Makuake store within various online malls, as well as reinforcing our workforce and enhancing our development infrastructure. Through these investments, we aim to ensure robust organic growth that is closely aligned with customer needs by the fiscal year ending September 2027. This is the plan we have in mind. Looking back at the external environment during the fourth quarter, we observed that the environment for manufacturers to create new products remained challenging due to factors such as high raw material costs and soaring shipping fees. At the same time, the impact of US tariff policies has increased uncertainty, and we believe that this continues to be a difficult period for decision-making among the various businesses related to our company. Furthermore, according to statistics, even during the summer holidays and bonus season, consumer willingness to spend has not increased in fiscal year 2025, with only travel showing an upward trend. As such, we see that domestic consumption of goods has yet to recover. In addition, as a direct competition for consumers' wallets, there were major e-commerce mall sales in August and September. Given the current environment where discount-oriented behavior is increasing due to rising prices, we believe that this has had some impact on the conversion rate of our support pre-orders. Let's look at each indicator individually. First, regarding total transaction volume. While the Q3 was significantly impacted by large-scale projects, and as a result, total transaction volume decreased in the Q4, we continued to feature high-quality projects, resulting in a year-on-year increase of 16.9%. This shows that the growth trend is continuing. This outcome is the result of focusing and intensifying our sales and support efforts in our key categories, and we plan to continue implementing various sales and support initiatives related to these areas. Regarding net sales, they are linked to total transaction volume, and although sales have decreased compared to the Q3, the growth trend since the Q2 of the fiscal year ending September 2024 has continued, with a 33.4% increase year-on-year. In addition, sales of advertising delivery service, which serve as a driver for increasing the gross amount of support pre-orders on Makuake, are also on an upward trend. As their proportion has grown somewhat, and taking into account feedback from our investors, we have included the figures for sales of advertising delivery service in this material starting from the first quarter of fiscal year 2025, although they were partially included in the past as well. Also, the take rate relative to the total transaction volume has risen to the 29% range. This is mainly due to the impact of sales of advertising delivery service and the secure system usage fees, resulting in improved sales efficiency in generating total transaction volume. Regarding gross profit, it increased by 32.3% year-on-year to 900 million yen, and we have been able to maintain a continued upward trend. Additionally, the gross profit margin has remained in the 73% range, mainly due to the growth in sales of advertising delivery service, which are recorded on a gross basis. As for SG&A expenses, temporary personnel costs increased due to strengthened investment in human capital in the Q4. However, this remains within the planned scale previously disclosed, and costs other than personnel expenses have decreased compared to the Q3. As a supplementary explanation regarding these SG&A expenses, the amount of personnel costs that temporarily increased as human capital investment in the Q4 was approximately 104 million yen. We are investing in skill development, including AI, and engagement for our officers and employees, with a focus on accumulating human capital. At the same time, we are conscious of maximizing total value for shareholders, customers, and employees over the medium to long term, aiming for corporate growth through human capital investment. As for operating profit compared to the Q3, which was impacted by a large-scale project, sales decreased and we proactively increased temporary human capital investments, resulting in an 82.8% decrease in operating profit compared to the Q3. Although we made significant investments in the Q4, we were still able to maintain profitability. Furthermore, as a result, we achieved profitability in every quarter this fiscal year. As we have mentioned before, we believe that this demonstrates a certain level of success in improving our earnings structure. Next, regarding the quarterly trends of our most important KPI, the number of active projects continued to increase in the Q3, thanks to the success of our push-type acquisition strategies for both new and repeat projects. As for the monthly project unit value, we have continued to implement our conventional unit value improvement measures, and except for the irregular increase in the Q3, we have maintained an upward trend. Regarding monthly project unit value, it has risen significantly compared to before 2024. While we may not see such rapid growth as we have up to now, we believe there is still room for further increases through continued improvements in our support services. As for the full-year performance figures, for the fiscal year ending September 2025, the impact of the transformation in the revenue structure of the Makuake service, which was implemented in the second half of the fiscal year ending September 2024, will be felt throughout the year. And in addition, thorough management of SG&A expenses will lead to a significant increase in profit. As a result, total transaction volume increased by 6% year-on-year to 17.64 billion yen. Net sales rose by 25.3% to 4.57 billion yen. Operating profit turned positive with an increase of 500 million yen to reach 440 million yen, and net income for the period settled at 400 million yen. In August 2025, we made a second upward revision to our earnings forecast, mainly raising our profit projections. Since then, our performance has continued to progress steadily, and we have slightly exceeded the revised forecast. Furthermore, compared to the initial earnings forecast for fiscal year 2025, net sales exceeded expectations by 20.5%, and operating profit surpassed the forecast by 272.7%, resulting in results that significantly outperformed our original projection. The steady expansion of the effects from refining our sales strategies and focusing on increasing monthly project unit value, along with the accumulation of our own efforts, contributed to these results. At the same time, the growth of large-scale projects that exceeded our expectations also had a significant positive impact on our forecast. Next, here are some of the main projects from small and venture businesses that began appearing in the Q4 of the fiscal year ending September 2025. Many of these projects featured unique and innovative products with distinctive functions not found elsewhere, particularly in the categories of gadgets, household goods, and hobby-related items, resulting in numerous successful support pre-order. We sense a growing momentum for gadget products equipped with AI and expect this trend to become even more active going forward. For large and well-known companies, multifunctional business products backed by advanced technology, as well as product lines that pursue high-quality experiences, continue to receive strong support from Makuake's backers. We expect that these companies will increasingly use Makuake as a platform for product launches and for gathering customer feedback in the future. The lineup of products viewed from the perspective of the SDGs also continues to expand, with many items made from recycled materials emerging as a response to the structural issue of mass production and mass disposal faced by the fashion industry. In addition, the introduction of sustainable products that can be used continuously while taking the natural environment into consideration, thanks to unique technologies and innovations, is also accelerating. Additionally, as a topic for the Q4 FY2025 Bank, Japan's first digital bank for businesses, which was conceptualized mainly by Ikeda Senshu Bank and for which our company had also been preparing for collaboration, has officially opened. By providing project-related data results from Makuake to FY2025 Bank, this system serves as a new resource for loan decisions that cannot be fully assessed by financial information alone. It evaluates the future potential and growth prospects of businesses, enables faster fundraising than before, and supports further business growth for entrepreneurs taking on new challenges. From the business user interface within Makuake, users can transition to FY2025 Bank and complete the entire process from application to loan execution online. In fact, several businesses that have been working with Makuake since the start have already secured loans through this initiative, making it a beneficial program for business operators. Another initiative we announced is business support utilizing AI. By systematizing the know-how and data accumulated through supporting over 47,000 projects with AI and creating AI prompts that suggest ideas for project page structure and improvements, we are able to reduce the time spent on information gathering and research in curation work by up to 75%. Additionally, this shortens the average number of days required to provide feedback on project page drafts. Various rapid implementations are also progressing within our company, such as improving response speed to project creators. Next, I would like to explain our performance forecast for fiscal year 2026. For the fiscal year ending September 2026, we are projecting sales of 4.76 billion yen and operating profit of 400 million yen. Regarding sales, while maintaining growth from the significantly increased results of the previous fiscal year, we are objectively and neutrally assessing the profit results for fiscal year 2025, which greatly exceeded our initial expectations, and are projecting a profit level that reflects upfront investments aimed at the early achievement of our medium-term plan. Incidentally, we have provided additional information here regarding our approach to performance forecasts, and we ourselves recognize that the performance forecast for fiscal year 2026 is to some extent a conservative plan. We plan to strengthen our fundamental capabilities by recovering foundational technical debt in system development, hiring necessary executives for departments that have so far been managed concurrently, and fostering customer retention through the growth of Makuake Insight and the Makuake store within various online malls. Until we are able to consistently generate stable and sizable profits, we intend to maintain this somewhat conservative outlook in our planning. Additionally, as I have mentioned repeatedly for fiscal year 2025, the strong results were largely due to the addition of large-scale projects that exceeded our initial expectations. However, I would like to add that our performance forecast for fiscal year 2026 also takes a conservative view regarding such large-scale projects. In particular, regarding internal factors affecting net sales, since the Makuake service has been in operation for over 10 years, enhancing the stability of our core systems is a major task necessary to improve development efficiency. Therefore, we will focus our efforts on that area. As a result, we anticipate a significant reduction in the volume of development for new features and improvements that would directly contribute to sales. Additionally, regarding the external environment, the outlook for overseas companies' willingness to launch advanced gadgets in the Japanese market remains uncertain, as it is influenced by the unpredictability of the weak yen and the state of US trade policies. Therefore, we are conservatively estimating the use and projections of these types of projects, which have often led to large-scale deals in 2025. Regarding this situation, we are making performance estimates based on a negative scenario. However, if overseas companies become more proactive in expanding into Japan, there is a higher possibility of an increase in large-scale projects, making it easier to anticipate an upward trend as well. In terms of operating profit, under our medium-term strategy, we will prioritize investments to transform our company so we can provide services that enable project owners to execute their product business across the plan, debut, and growth stages by leveraging customer insights. We will actively invest in initiatives such as Makuake Insight and the Makuake store. Additionally, our outlook also takes into account investments aimed at strengthening human capital, including investments in improving the skills of our officers and employees, enhancing organizational capabilities, and promoting the recruitment of executives to take us to the next level. As for our strategy for fiscal year 2026, under the approach of continuously supporting business operators in the domestic distribution market through our three services, Plan, which involves product planning by operators, Debut, which is for pre-sales, and Growth, which promotes general distribution. We aim to deepen our understanding of our target business operators and build a structure that encourages them to continuously use our services. Through this, we intend to further hone our competitiveness as a unique presence in the domestic distribution market. To achieve this, as part of our strategy, we will nurture new businesses so that we can provide services that mainly contribute to plan, debut, and growth for business operators. Tactically, we will further deepen our involvement in the distribution channels of the home electronics and gadget category and work to firmly establish our presence in this area. To make this a reality, as an investment in human capital, we will focus on upskilling our existing members by assigning external professional talent as supporters, strengthening AI-related skills, and hiring executives for key positions that have been handled concurrently. We will also renew our efforts to reinforce our corporate culture, thereby solidifying the foundation for executing our strategy. Building on that, our milestone goal for 2026 is to enter a phase where we are launching full-scale, large-scale investments aimed at the renewed growth of Makuake Incorporated based on the strength of our operating cash flow. Thanks to the steady progress in improving our earnings structure in fiscal year 2025, we believe that by further preparing our system infrastructure and strengthening our organizational capabilities from this point forward, achieving our milestone goal is within reach. Building on that, we plan to expand our investments in strengthening our growth capabilities, shifting from being the premier platform for launching new products and services to becoming a true business growth partner for challengers. Through these efforts, we aim to ensure robust growth in the fiscal year ending September 2027. The progress of our human capital management strategy, which serves as the foundation for these efforts, is also going smoothly. Throughout 2026, we will further embed various policies that strengthen our corporate culture and at the same time stably introduce and operate a new evaluation and compensation system. By doing so, we will enhance engagement and evolve into an organization capable of maximizing the creation and delivery of customer value. One of the key businesses essential to expanding and enhancing the value we provide is Makuake Insight. This is a research service that analyzes the genuine opinions of consumers based on the purchasing data accumulated within Makuake and feedback from over 3 million members, and then provides this data tailored to the needs of businesses. To reintroduce our business model, the first offering is a menu where we charge a fixed fee for each use of online surveys and individual interviews with Makuake supporters. The second offering is a menu where we charge a monthly usage fee during the contract period for access to a dashboard that allows you to view platform data from Makuake and customer insight data from each project at any time. The third offering is a menu where we charge a fixed fee per instance for sending email newsletters to Makuake members at the time of general sales. This serves as an upsell service for existing Makuake business users, but it is also available for new businesses that have never used Makuake before, so we hope to broaden our target audience and offer this service more widely. Additionally, regarding the expansion of the Makuake store within various online malls, after a project ends on Makuake, we act as a sales agent for the project owner's products in our stores on domestic e-commerce malls. This service is designed to support a smooth transition for project owners into the general distribution market. Here, we receive products from businesses and store them in our partner warehouses. Currently, we sell these products on consignment through the Makuake store within Rakuten Ichiba, Yahoo Shopping, and TikTok Shop. When users of each marketplace make a purchase, the products are shipped from the partner warehouse accordingly. Our company first receives the sales amount minus the marketplace fees and then remits the remaining amount to the business after deducting our commission. As both Makuake Insight and the Makuake store grow, we expect a synergistic effect that will strengthen business retention, create a stable pipeline of high-quality projects, and evolve our revenue structure. Therefore, starting in fiscal year 2026, we will intensify our business investments. That concludes my explanation of the financial results. As per our medium-term plan, we can say that we have achieved a certain level of success in reforming the profitability of our core businesses, and we are now seeing progress in the transformation of our human capital capabilities. Our new strategies are steadily moving forward. If these businesses are able to effectively utilize customer and market insights to plan, launch, and grow new product ventures, I believe we will see an environment where even more diverse products can take flight in the world than ever before. In the coming era, there are significant opportunities in the traditional distribution market, and if our company can realize these, our performance will naturally improve and lead to corporate growth. Therefore, I would like to focus on making this a reality. We hope to make our challenges a success so that you will continue to support us over the medium to long term. We sincerely appreciate your continued support.